Chevy's shocking move: why 3 million trucks suddenly hit the market. Chevrolet has just sent shockwaves through the entire automotive world by unleashing a staggering 3 million trucks onto the market at once, an unprecedented move that has left analysts, dealers, and truck buyers scrambling to understand what's happening. This isn't just a routine model year clearance or a small seasonal discount campaign. This is a massive inventory dump that could reshape the U.S. truck market for months, maybe even years, to come. For years, Chevy trucks like the Silverado 1500, Silverado HD, and Colorado have been cornerstones of the brand's sales success and a major profit driver for General Motors. But recently, several forces have been building behind the scenes, and now it looks like they've all collided at once. The supply chain shortages that limited truck production during 2020 to 2022 have finally eased, leading to a flood of new vehicles rolling off assembly lines. At the same time, consumer demand for big pickups has started to cool as interest rates climb, fuel prices rise, and economic uncertainty makes buyers more cautious about large, expensive vehicles. Dealerships across the U.S. have been quietly signaling trouble for months. Many lots were already overflowing with unsold trucks before this dump, and floor plan financing costs, the interest dealers pay on inventory, have been climbing. Chevy's decision to push so many trucks out at once appears to be an aggressive effort to clear out backlogged inventory, hit quarterly sales targets, and avoid leaving dealers sitting on old stock as the 2026 redesigns and refreshed models approach. Essentially, Chevy seems to be saying, move the metal now, no matter what it takes. Adding fuel to the fire, consumer preferences are shifting. While full-size pickups are still popular, the market has seen growing competition from mid-size trucks and hybrid/electric options that offer better fuel economy and lower ownership costs. Chevy's heavy reliance on gas-powered full-size trucks might be catching up with them just as Ford and Ram push hybrid and EV alternatives. By flooding the market, Chevy might be trying to grab market share before its rivals fully transition to new powertrains and price structures. For everyday buyers, this sudden move is creating a rare price storm. Dealers desperate to move inventory are expected to roll out record-breaking incentives, deep cash rebates, and unprecedented trade-in bonuses. If you've been on the fence about buying a truck, this could be the opening you've been waiting for. But behind the scenes, experts warn that this may also indicate deeper issues, such as overproduction, softening demand, or financial pressure inside GM, that could impact resale values and long-term pricing trends. Chevy's truck dump is more than just a sales event, it's a signal of major change in the pickup world. Whether you're a loyal Chevy fan, a truck owner worried about resale value, or a first-time buyer hoping for a steal, this move sets the stage for one of the biggest price shakeups the truck market has seen in over a decade. The real reason behind Chevy's massive truck dump: hidden trouble or genius strategy? Chevy's stunning decision to unload 3 million trucks at once isn't just a clearance sale, it's a high-stakes gamble that could either save the brand's momentum or signal deeper cracks inside General Motors. At first glance, it might look like Chevy is simply making room for new models, but when you dig deeper, you start to see a much more complex picture of supply, demand, and strategy colliding at full speed. One major factor is overproduction meeting slowing demand. For the past 2 years, Chevy and other automakers have been pushing to make up for lost production during the pandemic-era chip shortages. When supply chains finally improved, GM ramped up truck production aggressively, betting that America's love for pickups would continue no matter what. But now, with interest rates at their highest levels in decades and the average truck price already hovering around $50,000 to $70,000, many buyers are simply backing away. Demand has cooled faster than GM expected, leaving parking lots full and dealers begging for relief. Then there's the shift in buyer preferences. For years, trucks were considered unstoppable profit machines because consumers loved their size, power, and status appeal. But in 2025, that dominance is being challenged by new trends: smaller, more fuel-efficient trucks, hybrids, electric pickups, and even SUVs that can tow and haul without the massive gas bills. Ford's F-150 hybrid and Lightning EV, along with Rivian and Tesla's entries, have put pressure on GM to adapt quickly. Chevy's current lineup is still heavily gas-powered, and some insiders believe this inventory dump is about making space for the next-generation Silverado EV and hybrid options that are coming down the pipeline. Another possible driver? Financial pressure. Automakers make huge profits on trucks, far more than on sedans or small SUVs. If Chevy misses sales targets in its truck division, it hits GM's bottom line hard. Pushing this many trucks into the market could be an aggressive attempt to hit year-end revenue numbers, please Wall Street, and show strength against rivals like Ford and Ram. Some analysts warn it's a short-term survival move: flood the market, grab cash, keep investors calm, even if it risks hurting long-term resale values and brand perception. It's also worth noting the dealer dynamic. Dealers have been struggling under the weight of unsold inventory. Many are financing those trucks with loans, floor plan financing, which become expensive as interest rates rise. By offering factory-backed incentives, rebates, and wholesale price breaks, Chevy is helping dealers unload trucks fast, but it also means deep price cuts that could hurt the brand's premium positioning. Once a truck that used to cost $60,000 starts going for $48,000 or less, it's hard to convince future buyers to pay top dollar again. Whether this move is brilliant or desperate depends on how the market reacts. If Chevy successfully clears inventory, boosts cash flow, and makes room for the next generation of trucks, it could look like a smart pivot. But if demand keeps falling or competitors like Ford and Ram respond with their own aggressive price cuts, this could spiral into a full-blown truck price war, something the industry hasn't seen in decades. One thing is certain, Chevy's 3 million truck flood isn't just about clearing space, it's a calculated risk that shows the pickup market is changing faster than anyone expected. Buyers may win big with record low prices, but owners and investors will be watching closely to see whether this is a temporary reset or the start of something bigger. How this huge truck glut is crashing prices nationwide. The moment Chevy unleashed its 3 million truck tsunami, the impact on prices began rippling across the country, and it's happening faster than most experts predicted. What started as a few eye-catching incentives at local dealerships has quickly snowballed into a nationwide price freefall, with discounts growing larger every week as sellers scramble to stay competitive. For buyers, this is creating one of the best truck shopping environments in over a decade, but for owners and dealers, it's turning into a nightmare. The first sign of trouble came when dealership lots started overflowing. Many Chevy stores already had months of unsold Silverado 1500s, Silverado HDs, and Colorados before this huge inventory push. When GM pushed more trucks their way, dealers had no choice but to slash prices just to keep vehicles moving. It began with factory-backed cash rebates in the $5,000 to $8,000 range, but as the glut grew, some dealers added their own markdowns to compete, dropping total discounts to $10,000 or more on certain trims. Buyers who had been waiting on the sidelines suddenly saw trucks that used to cost $60,000 going for closer to $48,000 to $50,000, creating a rush of bargain hunters. Trade-in values have also taken a direct hit. With so many brand-new trucks flooding the market, used truck prices are falling, sometimes dramatically. Just a year ago, lightly used Silverado 1500s could sell for nearly the same price as new ones due to supply shortages. Now, those same trucks are losing thousands in value almost overnight. This is a tough blow for owners who financed at high prices during the pandemic-era boom. Many now risk being underwater on their loans as resale values tumble. The ripple effects aren't limited to Chevy alone. Ford F-150, Ram 1500, Toyota Tundra, and GMC Sierra dealers are all feeling pressure to respond. If Chevy trucks suddenly become thousands cheaper, competitors can't stay overpriced for long without losing buyers. Early reports show Ford dealers quietly increasing rebates on certain F-150 trims, and Ram is rumored to be preparing massive conquest incentives to stop loyal truck owners from switching brands. This could escalate into a full-blown pricing war, something the truck market hasn't experienced in years. Fleet buyers, companies that purchase trucks in bulk, are also jumping in to grab deals. Construction companies, small businesses, and government agencies that put off purchases during the last few years are now seizing the chance to upgrade their fleets at record low prices. That's helping some dealers move large numbers of trucks quickly, but it's also contributing to the overall downward pull on pricing, since fleets demand aggressive discounts to buy in volume. Even the financing side is shifting. With interest rates still high, GM and dealers are offering special low-rate financing or even 0% APR deals on select models to entice hesitant buyers. Some regions are seeing stacked offers, combining cash rebates, dealer discounts, and cheap financing, which hasn't happened on this scale since before the 2008 financial crisis. The result is a market that feels almost upside down compared to just 2 years ago. Back then, buyers were paying above sticker price due to shortages. Now, many are negotiating well below MSRP with multiple offers to choose from. Experts warn that while this is great for new buyers, it's destabilizing for the broader market. Used truck values drop, lease residuals fall, and current owners lose equity. In short, Chevy's massive truck dump has triggered a price avalanche, and it's not just affecting new sales but reshaping the entire value structure of the U.S. truck market. If the trend continues, we could be looking at one of the most buyer-friendly truck markets in over a decade, but also one of the most challenging for owners, dealers, and automakers trying to protect their margins. Dealerships in panic mode, discounts, rebates, and incentives you won't believe. If you've been waiting for the right moment to buy a truck, this is it, because Chevy dealerships are in full-on panic mode. With millions of unsold Silverados, Colorados, and heavy-duty models sitting on their lots, dealers are pulling every lever they have to move trucks before the financial pressure crushes them. The result? Some of the deepest price cuts, richest incentives, and most aggressive sales tactics we've seen in over a decade. The first wave of panic started when GM quietly rolled out factory-backed cash rebates, often ranging from $5,000 to $8,000 off MSRP on popular Silverado trims. But as the glut grew and lots became overcrowded, many dealers layered on their own discounts, turning a modest price break into a shockingly good deal. Buyers are now seeing total markdowns of $10,000 to $12,000 on certain trims, and in some regions, dealers desperate to clear space have gone even further with deep trade-in bonuses and loyalty cash offers. But it's not just about sticker price cuts. The financing deals are back in a way we haven't seen since before the pandemic. Chevy is offering 0% APR financing on select models for well-qualified buyers, and even those with average credit scores are seeing ultra-low rates compared to the broader auto market. In some cases, buyers can stack offers, combining factory rebates, dealer markdowns, and financing specials, to create deals that were unheard of just a year ago when inventory was tight and prices were sky-high. Lease shoppers are also seeing a rare golden moment. Dealers are advertising ultra-low monthly lease payments with little or no money down, trying to get trucks off the lot quickly. These deals are especially strong on higher-trim Silverados and Colorados that would normally lease for premium rates. For buyers who've been priced out of full-size trucks for years, these incentives are suddenly making it possible to drive home a highly equipped model for far less than expected. Dealers aren't just using price to lure buyers, they're pulling out attention-grabbing perks too. Some are offering free maintenance packages, extended warranties, or accessory credits worth thousands to sweeten the deal. Others are advertising trade-in guarantees that promise top dollar for your old truck, even as used prices drop elsewhere. And in highly competitive regions, rival dealers are battling each other with price match guarantees and same-day delivery promises to lock in buyers before they wander across the street to another lot. Behind the scenes, this frenzy is fueled by floorplan financing pressure, the interest dealers pay on unsold vehicles. Every day a truck sits on the lot costs the dealer money, and with interest rates still high, that financial squeeze is brutal. The faster they move trucks, the less they bleed. That's why some dealers are willing to take slim or even negative margins on each sale just to clear inventory and stop the losses. The panic is so intense that it's spilling beyond Chevy showrooms. Competing brands are feeling the heat and responding with counter-incentives to avoid losing buyers. Ford is increasing cashback offers on F-150s, Ram is pushing huge conquest rebates for Chevy owners, and even Toyota, normally resistant to deep discounts, is quietly sweetening Tundra deals to stay competitive. For buyers, this is shaping up to be a perfect storm of savings, but it's also a rare window that may not last forever. Once dealers burn through the excess inventory, prices could stabilize, and GM may tighten incentives to protect margins. That's why experts are saying that right now might be the smartest time in years to buy a new truck if you've been waiting for the market to swing in your favor. Winners and losers, how this impacts truck buyers versus current owners. Chevy's massive truck dump is creating a clear divide between winners and losers in today's market. If you're shopping for a new truck, you're probably grinning from ear to ear. But if you already own a Chevy, or any full-size pickup, this price shock might sting more than you expect. Let's start with the biggest winners, new truck buyers. For years, pickup shoppers were stuck in one of the toughest markets ever. Trucks were in short supply, prices were sky-high, and dealers had the upper hand. Now the tables have turned. With so many trucks flooding lots, buyers finally have leverage. It's not unusual to see shoppers negotiating thousands below MSRP, stacking factory rebates with dealer markdowns, and walking away with deals that would have seemed impossible just 2 years ago. Many buyers are even using the competition between Chevy, Ford, and Ram dealers to drive prices lower, playing one brand's offer against another's to secure rock-bottom pricing. Fleet buyers, businesses and contractors who purchase trucks in bulk, are also coming out ahead. With Chevy desperate to move units, fleets can demand massive volume discounts, free upfitting options, and special financing terms. Some small construction companies and delivery services that delayed truck purchases during the pandemic are now seizing the chance to refresh their entire fleet at a fraction of the usual cost. But while buyers celebrate, current truck owners are feeling the downside. The flood of new inventory is driving used truck prices sharply down. During the pandemic, many owners saw their trucks appreciate or hold value unusually well. In some cases, a used Silverado sold for nearly what a new one cost. That's over. With brand new trucks selling for far less, used models must drop in price to compete. Owners who bought at pandemic-era highs are now watching their equity evaporate and, in many cases, are going underwater on their loans, meaning they owe more than the truck is worth. Leasing customers are also seeing unexpected changes. Those who plan to buy out their lease at the end of the term are realizing that the residual values set years ago are now far above the market price. A truck they were supposed to buy for $45,000 may now only be worth $38,000 on the open market. Many are simply walking away instead of paying the inflated buyout price, which could leave leasing companies scrambling and impact future lease terms. Dealers themselves fall into both camps. Some are losing big margins by selling trucks at or below cost to clear space, while others with the right strategy, like pairing deep discounts with profitable add-ons such as extended warranties or accessories, are still managing to stay afloat. But overall, most dealers are struggling under the weight of unsold inventory and high financing costs, and the pressure to move trucks fast is eroding profitability. Automakers beyond Chevy are watching nervously, too. Ford, Ram, Toyota, and even Nissan know that if buyers expect massive discounts on Chevys, they won't pay full price elsewhere. This could force industry-wide price cuts, good for shoppers but bad for automakers' profit margins and stock performance. GM itself risks damaging the long-term brand value of Chevy trucks by making them seem like vehicles that can be had at deep discounts if you just wait long enough. In short, this truck price crash is a dream for buyers and fleets, but a headache for owners and dealers. If you're looking to upgrade or buy for the first time, it's an opportunity you may not see again soon. But if you bought in the last 2 to 3 years, it's a tough pill to swallow. Your truck is likely worth far less than you paid, and the market correction could take time to stabilize. Are other automakers about to follow Chevy's lead? Chevy's decision to flood the market with 3 million trucks hasn't just shaken buyers and dealers, it's sending shockwaves through the entire auto industry. Rival automakers are now watching closely, and some are already making moves to avoid losing market share. The big question, will this bold play spark an industry-wide price war, or will other brands hold the line and risk losing buyers to Chevy's deep discounts? The first company under pressure is Ford, the undisputed king of full-size pickups with its F-Series lineup. The F-150 has long dominated sales, but Ford can't afford to ignore a massive price swing from Chevy. Insiders report that some Ford regions have quietly increased cash rebates and financing incentives to stay competitive. For example, dealers are adding extra loyalty bonuses for current Ford owners and even offering special conquest incentives to lure Chevy shoppers. While Ford hasn't gone as far as flooding the market, it's already showing signs of defensive pricing, a move to keep F-150 buyers from jumping ship. Ram, Stellantis, is also in the hot seat. The Ram 1500 has built a strong reputation for comfort and luxury in the truck segment, but it's usually priced alongside or slightly above Chevy. That premium positioning is now at risk. Early reports suggest Ram is preparing conquest cash incentives for Chevy and Ford owners, meaning if you trade in a competitor's truck, you could see a hefty discount on a new Ram. Some dealers are rumored to be planning short-term mega sales events to clear their own growing inventory before the price gap gets too wide. Toyota faces a different challenge. The Tundra has always sold in smaller numbers than the F-150 or Silverado, but Toyota tends to avoid deep discounts to preserve brand value. However, that strategy may be harder to maintain if Chevy trucks suddenly undercut the Tundra by $8,000 to $10,000 or more. Toyota has already added extra financing deals and lease specials in some regions, hinting that it might have to bend its pricing rules to stay in the game. Meanwhile, new players like Rivian and Tesla, both trying to carve out space with their electric trucks, may actually benefit from the chaos, but only if they can maintain their niche appeal. However, steep price drops on gas-powered pickups could make EV trucks harder to justify for buyers who are price-sensitive. Why pay a premium for a new tech platform when a well-equipped Silverado or F-150 just became thousands cheaper? That's a problem these startups will have to navigate carefully. GM's move could also pressure the luxury truck space. GMC, Ford's Platinum and Limited trims, and Ram's Longhorn and Limited models all count on buyers willing to pay top dollar. But if Chevy's high-end trims, like Silverado High Country, start selling for deeply discounted prices, it drags the whole premium segment down. Buyers who once stretched for luxury might now find fully loaded Chevys at a fraction of the cost. The risk for the industry is a full-scale pricing domino effect. Once consumers see one brand offering steep discounts, they become resistant to paying full sticker anywhere else. It's a cycle that's hard to reverse once it starts. Automakers prefer to keep pricing power strong, but if they're forced to chase Chevy down, profit margins could shrink across the board. There's also the EV transition factor. Ford, GM, and Ram have invested billions into electric and hybrid trucks. If the gas-powered market collapses in price, it could slow EV adoption. Buyers might choose a heavily discounted gas Silverado over a pricier electric option. That could throw off long-term plans for electrification and hurt profit forecasts that rely on EV growth. In short, Chevy's move has put every major truck maker on alert. Some are already matching deals quietly, while others are holding back to see if this wave will pass. But if sales start slipping and Chevy grabs market share fast, expect to see big-name competitors join the discount war, and the truck market could enter one of its most competitive, price-driven eras in decades. Chevy's decision to dump 3 million trucks is shaking the entire auto market, and we're only seeing the beginning of its impact. Prices are already in freefall, dealers are scrambling with record incentives, and competitors like Ford, Ram, and Toyota are being forced to react. For buyers, this is a golden moment, a chance to score deals on full-size pickups we haven't seen in over a decade. But for current owners, it's a warning sign. Resale values are dropping fast, and the truck market is entering a period of big changes. If you've been waiting to buy, this could be your moment to strike, but act smart. Compare offers, play dealers against each other, and don't settle for the first deal you're shown. If you're an owner worried about value, keep an eye on incentives and trade-in programs that might help soften the blow. One thing is certain, Chevy's bombshell has officially started a price shakeup that could reshape the entire truck industry. Whether this is a short-term buying window or the start of a long-term price war, we'll keep tracking the numbers, the deals, and what the other big brands do next. If you found this breakdown helpful, hit that like button, subscribe for the latest car market updates, and stay tuned, because this truck story is far from over.